Running a business is tough. Even tougher when your bills keep piling up and your cash flow feels like it's going in reverse. Ever find yourself staring at a spreadsheet wondering how you're going to make payroll and pay off that business loan? Well, you are not alone. A lot of businesses are struggling right now, even more with inflation on the rise in recent years. And that's why today I'm going to tell you why and how to manage your current business debt in such a way that you can hopefully say goodbye to all those sleepless nights. Why listen to me? Well, I'm Mark Russell and I'm a financial wellness board member with National Debt Relief and a successful business owner myself. But at one point I was buried in about $80,000 of debt, even while working in corporate finance. So yeah, I know what it's like to run the numbers and still feel like you're falling behind. But I know how it is to get out of a dire situation as well. There's always a way out. Right now, we'll go over what business debt means, how to get a grip on it, and what to do if you feel like things are starting to feel out of control. Whether you're running a side hustle or a small company with employees, we've got you covered. Let's get one thing straight first. Debt isn't always bad. Many businesses take out loans to grow and expand or use the money to invest in the new equipment. But the key is managing that debt in a financially sound manner. Because when you don't, that's when bad things start to happen. Late payments, which often means sky-high interest rates and late fees, missed business opportunities, and sleepless nights. And that's probably the last thing we want, because we want our business to give us back freedom and not take it away. That's why debt management is key. To start, debt management is all about control, knowing where your money is going, how much you owe, and making a plan to stay ahead of the curve. This is what's going to help you keep your business financially healthy and can help you by giving you some peace of mind. If we dive deeper into the financial side of your business, we have to talk about cash flow. This is literally the lifeblood of your business. Cash flow is money coming in and going out of your company, and we need that to run your business. Your cash flow tells you how liquid your business is. It answers questions like, how well does your revenue cover your expenses or even pay back loans? And how much of what you make can be reinvested back into your business? If you ever looked at your bank account at the end of the month and thought, where did all my money go? That, my friends, is a cash flow problem. Basically, your business cash flow can either be negative or it could be positive. Positive cash flow means that your business is bringing in more than what you're spending. You've got money left over after expenses, and that means that you could pay down debt, save, or invest back into your business. It's a good place to be in because growth is happening and you're building momentum instead of just getting by. This is probably where you want to be most of the time. All right, let's move on to negative cash flow. That's when you're spending more than what you're making. You're dipping into reserves or taking on more debt to cover any shortfalls you might have. And it might work for a little while, especially if you're in the growth phase or dealing with seasonal fluctuations, but it can't last forever. Over time, negative cash flow becomes a signal that your business model or operations, they need to shift. And here's the kicker that not many people get. Cash flow isn't just about pure profit. You could be profitable on paper and still run out of money if the timing of your expenses and your income does not line up. And yes, cash flow can be negative for a few months, putting you in some really tough situations, even if you're turning a profit. That's why understanding your cash flow, money coming in and out of your account, is very critical. And while we're diving deeper into that topic right now, to understand cash flow at a deeper level, we have to talk about cash flow statements. A cash flow statement is a financial report that shows how much money flows in and out of your business during a very specific period of time. It helps you see exactly where your cash is coming from and where it's going. It's one of the most important tools for evaluating your business's financial health, especially when you're trying to manage debt. There are 4 key types of cash flow that show up on this statement, and each tells you something different about how your business is operating. First up, operational cash flow. This is the cash your business generates from its main operations. Things like selling products, delivering services, and paying for everyday expenses. It reflects your company's ability to generate consistent income from its day-to-day activities and how well the business can pay operating expenses like employee salaries and the cost of manufacturing goods. Positive operational cash flow normally means your business model is working well. Next up, investment cash flow. This one tracks money spent or earned through buying or selling long-term assets like equipment, real estate, or even stocks. If you're investing in growth, this area might show more cash going out. And that's not always a bad thing, as investments might increase your business's net worth over time. It all depends on the bigger picture here. And third, you have financing cash flow. This type of cash flow focuses on your business's funding. It includes incoming cash from loans or investors and outgoing cash from repaying debts or paying dividends. Monitoring this helps you understand your leverage and how reliant your business is on outside financing. But here's a good rule of thumb. The less reliant you are on outside financing, the more power you have over your business. And last but not least, free cash flow. This is basically a whole other type of cash flow statement, but important to know nonetheless. As investors in your company, they're mostly interested in a business's free cash flow. This is the one they often use to evaluate the profitability of your company. It tells you the amount of cash your business has left over after covering capital expenses. It's basically your financial breathing room. Money you can use after operational expenses are taken care of, which you can use to pay off debt, save for emergencies, or reinvest into your business, which is really important stuff to know if you're running a business. Understanding these types of cash flow can help you identify red flags early on and spot opportunities for savings and decide where to focus your efforts. And when you're trying to manage or reduce debt, a clear view of your cash flow gives you the insight to build a realistic plan and the power to stick to it. If your business debt feels overwhelming and you can't seem to find a way out, know that you don't have to go through this fight alone. Talk to your lenders, create a realistic payment plan, or make sure you're finding some help. You can find support in the form of a debt relief company who typically offers different types of debt relief. Debt relief options like debt settlement or debt consolidation might help you simplify things. And if you're in a more serious situation, exploring bankruptcy could help you start off on a clean slate. But the most important step to take here is taking action and taking one step at a time. Do you want to go more in depth on the different types of debt relief options available to business owners? Then check out this video where I'll tell you all about it. Hopefully you got some value out of all the information we shared today. We broke down why business debt management is important and how to start managing yours, from understanding cash flow to different types that show up on this statement, to what you can do when debt becomes too much to handle. No matter where you're starting, there are options, and there's always a path forward. If you're a business owner struggling with debt and looking for a solution, debt relief companies like National Debt Relief, which specialize in debt relief programs, could help you in your journey of becoming debt-free. The solution to your debt problem might be closer than what you might think. For one, National Debt Relief has in-house debt experts who are there to support you every step of the way. If you have any questions for like a free, no obligation debt relief consultation call with them, visit their website at nationaldebtrelief.com. If you happen to have any other questions regarding any other financial related topic, check out the other videos in the series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you on the next video.